So this is our both weekly and daily cycle analysis for the S&P 500 with the weekly on the left and the daily on the right as usual. Let's go ahead and pull up the weekly chart. Now, as Slim highlighted in market week, when you're in these intermediate term corrective periods, like we believe we are, rallies have had tests up that have then been sold. You can see them just from a visual point of view on this chart. You saw a test up right here, a failure, and a move back down. You saw a test up right here, a failure, and a move down. You saw a test up right here, a failure, and a move down. And that's what we are seeing right now. We're seeing a test back on the upside. We have not seen a violation of any key levels, just like what happened back here, and back here. No move through an important 78.6 fib, and rather a failure prior to that. And then the highest probabilities, therefore, would be for one more test back down. Now, we were looking for, at minimum, a test of the intermediate term 23.6 fib at right around the 49.90 level. That was hit. And now we are looking for likely a test of right around that 38.2 fib at 48.27 or so in the S&P 500 cash. Again, there is a low that is due here, 415 to right around 6.3 or so in the S&P 500. Highest odds are that this is a bear flag that is poised to turn down. And as always, we are going to be flexible and have our levels that say that something has changed, and that would be the daily 78.6 fib. So let me highlight that for you. We will go ahead now and shift over to the daily cycle analysis, and I'm going to overlay the levels for you. Again, that key line in the sand is the 78.6 at 51.98. Absent of a move through 51.98, the highest probabilities are that it would fail right where we are, basically right here, from 50.72 to 51.46. That's where we would be watching for a peak to form on this minor cycle, and then for this to turn back down on the downside as this dominant cycle. And keep in mind, this is the dominant money flow pattern. So the dominant money flow pattern would be pushing down in addition to that minor money flow pattern. And as I said in the opening segment, the earlier that we move through this key minor cycle low at 49.53, the more bearish it would be. Meaning if you lose this early, that says that there is all this time left here for a possible pullback. And you can see our next trough is not due until the end of May, early part of June. If it takes longer to actually lose the low, and we only lose it out here, let's say, towards the end of May, well, that doesn't leave that much time left for a pullback. So you'd only look for a little bit lower and then for this to turn back up after that. So it's really important, again, to understand how we use time to then come up with our targets on, in this case, the downside. Really important to watch this key minor low at 49.53.56. The earlier that low is lost, the more bearish the scenario would be on the downside. Now, I just want to go back to also focus on this core cycle structure. This is still a bullish right-hand translation on that dominant intermediate term cycle. So once this pullback finishes up here, as long as we're holding above the key 61.8 fib, which is all the way down here at 45.52, the highest probabilities are that this would turn back to the upside and lead to higher highs going out into the back half of 2024. I just wanted to end this part of the video with that message because it's super important not to get overly focused on just what's happening right now. We have to see the forest from the trees and understand this is still a really bullish picture, and this bull flag is likely to set up an opportunity for a swing long into new highs going out into the back half of 24.